cheat sheet going on.
Welcome back to Epic Lunch and Learn, episode 43. We got some LOs in the building. Marissa, Vince, and me. How are you guys? How's everybody going?
I'm doing all right. Just as we were joking offline, I didn't do the assignment, so Marissa might win this one.
Well, Marissa, did you do the assignment?
I did.
Thank you. So,
okay, good.
We're gonna rock this out.
We're even. So we're gonna pretend this is a college class, and Dante's the professor, and we're gonna see if we can muddle through the fake assignment like I did it.
OMG. You know what? I wanted to give something. I read articles. Not always do I read books. I read articles, and I came across an interesting article that was on the National Mortgage Post, and it was about brokers. Are brokers bad? Are bankers better? And it kind of gave a historical, just history of, the rise and fall of mortgage brokers. And, there's still a level of, I would say in just the mass population, what is a mortgage broker? What do you do? What is different? There's so many hybrids out there per se. So sometimes it gives the illusion that they have this opportunity that we offer, and what's the reality of it. So I thought it would be good to kind of go back to the basics with some LOs. Obviously, Vince, you've had experience in direct retail. I've had direct retail. Marissa worked for Wells Fargo back in the day. I mean, that's where we first met. So I mean, there is a level that we could have a conversation for the next hour, just to explain what is a mortgage broker, how do we fit in the place of business right now to help people with their lending needs.
Sure, we can muddle through that article there and do all that, right? I mean, obviously, we know everything changes and it keeps changing and changing. And I know you're going to get into it. I mean, brokers. I always say the thing: brokers better, not to knock the retail bank. It's just a little statement, little joke. We have more options, but our platform is evolving constantly, where banking in the traditional matter is kind of just going away as it was perceived 40 years ago, right?
Yeah, if we take it, let's go with some numbers. 60% of the business was being taken care of by independent mortgage professionals back, 2007, 2008, right? And then that dropped to a whopping, I think, as low as 5%.
Yep.
It was really a slander job that was done. As far as the crash in 2008 was because of mortgage brokers. We had these relationships with appraisers. We manipulated numbers. We created the havoc. Really, this blame and slander was given to our industry and as a independent mortgage professional, but that's changed over time, right? I mean, one of the greatest weaknesses that we have as human beings is our memory, right? We don't want to remember pain. So people tend to forget things as time moves on. And I think that's actually helped us in the mortgage space.
Yeah. Throw a little shade onto that one, right?
What do you guys think about that?
The car salesman became a loan officer and he was introduced to Bear Stearns, right? and for those that have the background here is what Dante's basically getting at with that intro is you put the salesperson in Wall Street in the same room and said, hey, can you do this? Of course I can do this, right? That's what led to the crash. I mean, there's a movie on it. We're not going to get into it. Watch it. It's called The Big Short. It's true, right? Don't read it. Don't read the book. Watch the movie. It's faster. And, it is what it is, right? But that's essentially what it is, right? But that relationship's no longer. You don't go to your corner bank today and say, hey, I need a mortgage. I'm self-employed, this, that. Well, we can't do that, Mr. Bertocchini. You need to go somewhere else. but yet I have $200,000 sitting in a bank account in their name.
We were talking about it. I mean, way back when, but like Ben Bernanke, when he was the Fed chairman, and then the day one of him not being the Fed chairman anymore, he can't get a loan, right? He's unemployed. So there's a process in the industry per se that doesn't always make sense on how we do things, but having flexibility. I've looked at it. I was always Married with Children, Al Bundy, right? A shoe store, right? You come in and say, "Hey, I'm a size 7," and it says, "Sorry, sir, all we have are 5s." And I said that is kind of the analogy when you go work for a big box bank. They have a shoe size. They have a certain parameters that if you fit, man, no brainer, we can get it done. But if you don't fit, you're declined. And I think on a holistic level, from a regional perspective, there's certain areas like Chicagoland area. There's highly competitive, but I think and it gives you a lot of different variety and choices. But I think as we've moved on to different states, I've noticed that customers don't have the same choices. They don't have the same variety. In Georgia, let's just say it's really bank driven. You're either new construction or you go to a bank, and the flexibility of what a broker can bring. If like, hey, you're not a size 5, you're actually a size 10, and I got something for you. I think is very important that we need to kind of promote and talk about. And so let's share experiences. Obviously, we can talk about a little bit of the past. Things always evolve, but let's talk about it. I mean, and there's pain points. I mean, in the article, there were some pain points that are still relevant today. I literally had a customer here for 1 hour. She drove here because what we did was we had her old phone number. We had her old cell phone number that we put into the application. And so she's like, I don't have that phone number anymore. I changed it. I was like, oh, yeah. So then we updated it and then we gave it to the lender saying, hey, her phone number's changed. And their system can't figure that out. They only got the phone number. So when we're doing all this multi-factor, 2 times you got to log in, they keep wanting to text the old phone number. And she's like, can't you just print this out or something? I'm willing to sign it. And she was here for an hour. We still couldn't figure it out. It's crazy.
Wow. Yeah, that's crazy work.
And that makes us look inept, right? I mean,
right. Still learning that technology thing there, bud. I'm still learning that technology thing. Right?
Still.
I mean, I did it this week too, right? Client, hey Vince, we got to sign all these documents electronically. Yep. I need you to get into this portal. There's no video to explain how they're supposed to do it from all the lenders that we use. And then on top of it, oh, we're trying to do this from our cell phone. Right.
Yeah.
That was
and
another
then
thing.
You can't see everything. Oh yeah, it's there. Oh no, it's not. Oh yeah, it's there. And you're on the phone for 45 minutes. Right.
Yeah.
Well, can't you see what I see? Nope. It's a portal. It's for your security. I'm not allowed to see it.
Yeah, it is. Technology is one of those things, and we're going to. Our industry is old, and we have to adapt. And we're trying to adapt, and we're trying to, and thanks, and this was a shout out. Thanks to Rocket Mortgage, thanks to UWM. They're, really the pioneers that believed in this broker channel, and even if there are disputes and fights, amongst themselves, I mean, they've helped us. They've promoted the independent mortgage broker. They haven't smashed us. They've said, hey, we believe in this channel and we offer all these different products to people, and the products are, credit driven, but also income driven. Do you want to touch on that, Marissa?
No, go ahead.
So, obviously credit driven means that we can work with people with 500 credit scores, and we can work with people that have 850 credit scores. So a lot of times realtors like to put us in a block, right? And they say, hey, if you're credit challenged, go to the mortgage broker. But that's not necessarily the case. We can work with people that have 800 credit scores because we have different lenders, depending on their situation, right? So, and then obviously, can you talk on the alternative incomes, right? Different income products that we have.
That's so true. And just go, the biggest misconception about the banks versus going with a broker and we see this all the time, is they have better rates, right? And that's, I mean, and most people going to go with them, of course, because they have the visibility. They have built that relationship with them. If I have a checking account with them already, why not, go that route and try to get a mortgage through them. However, consumers don't understand that, like you mentioned, that the products are limited. If I'm self-employed, can go to Chase Bank because they don't have the program or the product to support my transaction. So I think the biggest misconception with the banks is they have better rates, and that may be true in some cases. However, they are very, very limited on their products.
Yeah. Product limitations a big thing there, and also too, I mean, and this is no shout, right? Everyone needs a job, and it is what it is. But you're an employee of the bank; you're not running it as your own personal business. So the education requirements are different. They're exempt from certain things, so it makes a little different platform, essentially, right? Because the bank is just telling them what they're looking for, and they're just channeling and focusing just on that channel and not giving you the wide picture.
Yeah. I always tip my cap to, the jumbo world, right? So in the jumbo world, I feel like a bank will roll out the red carpet and really compete on a level of trying to obtain your business.
Of course.
And to your point, yeah, that just makes sense, right?
Well, right.
But
there's multiple reasons to that,
more
right?
money, right?
Right, correct.
The money's there, the assets are there, they're servicing it. It's the
Correct.
all-in-one package, and it's clean credit and everything else that potentially goes with it, right? I mean,
Correct.
in all reality, that's the harder product for us.
And
But
even
go
on,
ahead.
and not to cut you off, but from my experience working at Wells Fargo, in the jumbo world, they had special teams. Only certain type of people can touch the top-notch employees touch those top-notch loans, right? And so they're kind of, on an employee level, kind of lower down the employee morale at the company, because you're always wondering why I'm not making that team, why I'm not dealing with the $1 million loans. But they kind of separate those people in the retail world to have that special, I don't want to say privilege, but special, what I'm looking for, Dante.
High net worth,
special.
wealth management group.
Private wealth clients.
Right, exactly. So
Yeah.
that they're higher up there.
And we just witnessed an expansion on the loan limits, right? So I'm the old guy in the realm, me and Vince, where we'll say, I remember when the max conventional loan limit was 417.
Man, but don't even go there, right? That's not really that long ago, right? Like that's a whole different show, right? Like look at how much more buying power and leverage is out there in the marketplace for housing than when we were there at 2022, 417.
Now it's
today you can go buy
right?
an 850. Right, you can go buy I was going to say an $850,000 house, put 5% down, and finance $800,000. Who would have ever thought of that, right? Like that would have never come across, right? But that just goes to show how much values have increased and everything else that's out there, right?
Exactly. And it actually has expanded our pool of customers that we can help. Is basically, the way I look at it is like now that 2026 conforming limits are coming out, and some of our lenders are allowing us to move forward on it today. And now it, literally has just increased my pool of customers that I can help. Now if you're buying an $894,000 house, 5% down, you're conventional borrower. You're not jumbo. So we're so competitive from that level of from a service. And I love that point that you bring up, being an independent mortgage broker. Like, what does that mean? I mean, that means it's my own business, right? I mean, I have to succeed. I have to build a business for me to make money. I don't receive a salary. I don't receive an hourly wage just to sit here. So I am constantly trying to promote information to help you, to make a decision. And then hopefully you choose to work with me. And because working with me, that's how I get compensated. That's how I take care of my family. And I'm going to provide that service for you. So I think there is a level of like urgency that comes into being on this side of the fence. I think there's a level of expertise that, we just don't do this to do this. We're doing this to really help
For
you.
you, right?
Yes. And, and then we think about Costco, right? Costco, Sam's Club. I mean, I'm wholesale versus retail, right? So there are times where, we're going to have the better deal. 9 times out of 10, we probably are going to have the better deal.
Yeah. Big example, Walmart versus Sam's Club, offer the same thing, right? Ultimately, you go to Sam's Club to get the bang for your buck. Of course, you got to buy in bulk, but it's wholesale. You get the bang for your buck. Another thing is where I looked at as the middleman. I am not the middleman. I'm the one that's actually on the ground working for you. I'm the first person.
We're the octopus, not the middleman. We're the octopus with eight different arms going around to everyone else, right? I mean, that's essentially the rule of a broker is bringing parties together, right? I mean, at the end of the day, that's what it is.
Exactly.
We, I sent out a video this morning, and it was talking about 65% of business comes from word of mouth and referrals. And that we have to focus on, building these relationships, building out these communities so we can serve and help people out. And so when I thought about that was I got a referral. I got a referral last night from a general contractor, and he referred me a client that, he went and inspected a property that she wants to purchase. And so he was like, okay, great. And he's like, hey, have you gotten pre-approved for a mortgage yet? And she's like, yeah, I'm already pre-approved, but I'm struggling because I got pre-approved twice. She first went to Union Home Mortgage and got pre-approved. And then she went to Rocket Home Mortgage and got pre-approved, but now she's looking into a VA renovation loan. FHA 203K. I'm thinking about 2 different clients.
You listened to yesterday's show, huh?
I know. FHA 203K, and both of those retails don't offer that. And so there is a difference. And I said, hey, I just want to let you know, first off, both of those companies are great, but we're already approved with them. And you'll get wholesale pricing versus retail pricing. So right off the bat, you just come to us and we'll take care of you. I have Rocket, I got Union, and those are great companies. And it's just one of those things, but come to me and you'll have the wholesale pricing. And then once again, when you go retail, you're limited on what you have to offer. So when you want to buy a house that needs a little fixer upper, I need about $50,000, $70,000 to fix this up to where I want it. They don't have that option for you. Exactly. So now she's going to have to get pre-approved again for the 3rd time. And so that's where we are. So, I see, like I said, when we started off, 60% of business was being done by mortgage brokers, prior to 2008's implosion. And then it dropped all the way down to 5%. And it was looking meek. And then we've made this surgence.
I think we're as of late. 35% today.
19% per Matt Ishbia.
I thought Matt's number was a little bit higher. I mean, I went to the UWM live. I thought we were closer to 30.
I thought he said 19, and then he wants to get there. I thought he wanted to get it.
Unless that was the projection he was going by.
Yeah,
he wants the growth that's going on.
Yeah, he wants 1 out of 3 loans to be done by an independent mortgage broker.
Yeah, they also signed some new thing. I don't know if you saw that built. They're giving people like credit card points for making their mortgage payments on time.
Oh, wow.
Yeah.
That's a good benefit.
Another venture partnership that he's got his hands in. I mean, he does a great job with a lot of different things, but
I always felt like we should receive residual income.
Absolutely, right? I mean, if the loan performs, we should get residual income.
100%.
Right? Just how kind of life insurance works and everything else, right? But we don't, right? And that's part of the thing, right? That's why we got to stay in front of our customers and give knowledge, and that's the difference between us and them.
Correct. I think technology has, even though I complain about technology because an hour of my life just went away, but I do feel like technology has helped the broker side. We're not as antiquated compared to our brethrens, right? We can offer the same type of DocuSign capabilities, e-signing disclosures. So we do have a lot of those capabilities that I think has kind of closed the gap on the experience level that you would receive from maybe a bank versus a broker. What do you guys think about that?
Yeah. Marissa, you want to go first? I want to touch on the technology.
She might be frozen right now.
All right, I'll go then. So to me, the technology is great. Everything's going to continue to evolve in technology. But the old-fashioned taking the application and having that conversation with your client, I feel still needs to be a must. And it's not just, oh, here's my link, go fill out your application. You need to have these conversations with your clients. It's how you learn about them. Hey, do you have kids? What are you doing? What are your plans? Not just, what's your name? What's your social security number? What's your address? How much you looking to buy? I'll call you back, right? Because then you pull credit. It takes away from the, well, let's call it the relationship, right? By using the technology, you're avoiding walking into that bank and having that conversation with that loan officer across the desk. I don't know if Marissa's back and can hear me. I know you can hear me because I see you nodding your head.
Yeah. I don't think she's back yet. She's still frozen. But, it's one of those things, and Marissa actually kind of touched on it. It's, we were kind of the wild cowboys back in 2008. We were kind of the willy-nilly, no compliance, with these crazy products. Compliance really came into play. The whole CFPB, the whole NMLS system really kind of got us, geared on like, okay, we got to get our act together. This is serious, right? We can't be the used car salesman. We can't be the gas station teller.
Correct.
And now all of a sudden I'm a loan officer in the moonlight. We have to kind of be a certified, licensed professional.
And it's fair. It cleaned up a little bit of the industry. I don't mind the education, but us being in it for so long, at a certain point in time, you should be able to exempt out of it because those classes really don't teach. It's just, hey, what's TILA? What's Reg Z? What's this? How many times are you going to go over that, right?
Sure.
Right.
I mean, as we're doing our 8 hours of education and our continuing on for the 10 other states that Epic is licensed in, right? We're spending almost 40 hours to do education that we've already done over and over and over and over again.
Correct.
I wish they'd come across with just one blanket license for every state and be done with it.
Yeah, I wish. I mean, I feel like they don't know what to do with the industry, which is kind of crazy to say because, you got this $1 trillion industry. You're helping all these people, hundreds of thousands of people will buy and sell a house this year. And you're in the front lines helping these people, and from an education platform, they don't know what to do with us. They really just here's Reg Z, here's Reg X, and here's Reg B, and you're really just you're soaking up the hours, but I don't know how much people are really retaining.
Yeah, it's memorization, point and click until you pass the test, right?
Right.
But then when you look at it, right, the banks are exempt from it.
Correct.
Now, they have their own internal education of anti-money laundering and all the other stuff, but it goes to the point of we have to pass something in order to maintain ours. They don't.
Correct.
And it goes to the point of the education could be failing. On the other side of not having to do that, right? You're not getting the variety that we present.
Correct. And I just, definitely, obviously, we're going to be a little biased today. We're going to be biased on the concept that, we have 3 people that have chosen this side of the path as being an independent mortgage broker. But I just thought, like I said, going back to the article, it kind of grouped everything based on rounds, like boxing. So, it was kind of like, box, round 1, round 2. And, we really struggled at first, just obviously, being a mortgage broker. I mean, having that choice was 1988. It's so like it's not a whole huge. No, it's really. I mean, what is that? 37 years. I mean,
yeah, but that also comes with the standpoint of you need 20% to buy a house. Now you don't need the 20%, right? It's the evolution of the industry.
Correct.
And I don't know if there'll be an opportunity for this, but there used to be another orange man in the mortgage banking industry. Maybe we'll joke about it later, who kind of ran Countrywide into the ground, right? We don't talk about him too much more, right? But for all of us that know, right, it was the first orange man in the finance industry, right?
Angelo, I remember him.
That's correct, right?
I remember Angelo.
And you don't hear about him much more, right? So,
No. I mean, the thing is, just even to the point of, like I said, the client that calls, she went to 2 different people and they didn't have an option for what she was looking for. But it's hard, right? As a consumer, how do I find a mortgage broker, right? Like, how do I know I'm working with a broker? Because sometimes these banks, being this hybrid per se, try to, act like they are us, but they're not. So, any advice to them, I think would be important to kind of share.
Marissa, you want to go?
To the consumer, I'm sorry, I'm having all these tech issues.
Just wanted to make sure you were there, can hear us. So we don't want to shut you out.
It was like Soju said, technology events. My computer was just like, bye bye.
Yep.
We're used to it by now.
How do I know, right? How do the consumer know that they're working with a broker? That's a good question, Dante. I would say the products. Ask them what products they offer. If they have a wide range of products, then for sure you're working with a broker. But if it's limited, hey, I only have these 1-2 FHA or just conventional, then you're stuck with a retail person. So unfortunately, it sucks, but I would say go with the brokers. We have the best options. We can shop around rates. We have just so much more to offer than retail. We make it personable. Retail, you're just another number, right? You're a loan number versus me. I actually know your name and actually try to build that relationship with you.
We talked about it a couple episodes ago. There was a client that I helped close in like August or July, and he had been a Chase mortgage holder for 20 years. Banks at Chase Mortgage, and then he needed money. He needed a cash out refinance to take care of some business, and based on his qualifications, based on the situation, they said no, and he was like, "What? I've been shelling this money to you. What do you mean?" He felt like there was a relationship. We can think about that in a relationship with guys. You think you're dating her, and she's like, no, and you're like, but I'm there all the time. Like, no, man, she's not into you, man. And it's just one of those things where it hurt him though. You could see he was really kind of disappointed. He was disappointed in the fact that they couldn't service him. And he felt like there should be just this layup, like, well, I've been with you. I've always paid my mortgage on time. Yeah, I got this little bump in the road, but you can't help me. And it's like, well, you didn't fit our guidelines.
Yeah. Right. So, what are we going to do?
Straight to the point.
We're going to come up with a new shirt that says date the broker, not the lender, not the banker.
Look, I like that idea, Vince. We could go ahead and make it. I left me a little shirt.
Yeah.
I mean, it's just, these relationships that people think they have are just not factual, and that's, I mean, so it's like, do you fit in the box? Yes or no? If you don't fit in the box, you will not qualify. There's no matter what how many times you've been making your payments on time. If you don't fit in that box, if there's a situation that doesn't work for them, you're not going to be eligible. And so I think it's important for people to kind of understand that and know it and say, hey, develop a relationship with someone who has all the programs, all the products, and we're still expanding. I did a little deep dive. There's about 243 wholesale lenders.
Ooh.
Now, a lot of them do all the same things, right? So it's basically Walmart, 200 times over, but there are some uniqueness to each and every one of them. And as we continue to expand that product line, there might be that situation where, I did a bank statement line of credit deal. I did, obviously, I was talking about it yesterday, the VA renovation deal. So there's different products that, we don't do them every day, but it might pop up. It might be a situation that we can help you, especially if you have a unique situation.
Yeah. I mean, the other thing with that too is, right, we have a wide variety of products. So we don't necessarily just target certain products either, right? So we might not see it as often as well. But again, to your point,
Correct.
you know, my statement to this, and then I'll stop. Just don't let technology take away from you learning the process and educating yourself. The easiness of, we'll get you documents in 2 days and you can point, click, and sign, and you don't ask questions, or they're not on the phone trying to help you sign those docs or whatever that may be, then that's just, in my opinion, that's not the person you should be working with.
Correct.
Yeah, I feel overall that the broker technology has vastly improved, and I think the experience level that people have now, even if I worked with a broker in 2012, and then I worked with a bank in 20, and things were, I think now, though, if we go into the now, because things are always constantly evolving, constantly changing, I think it's adequate, and it compares, whether you're going through the big box bank or us, and you'll see like, oh, experience wise, it's e-signing, from that level, from a customer's level.
I mean, it's all the same. And if there's anything missing, it's all going to get there in the short term anyways.
AI changes the game, and especially we got the new LOS platform. Why don't you talk about that, Marissa?
Oh, I love it over here. So yeah, we got a new platform. I love it, love it, love it. Just to be able to be on the go and still get work done. Previous to this, we were stuck to a computer desk, and I just couldn't get with that program. It's 2025. Being, we I like to be more in the field. I like to get out there, meet new people every day. That's just the vibe of my business. So this new platform is just so amazing. It helps us keep up with the customer relationship, build the relationship, build the trust. It's just so amazing, so streamlined. I just love it. I just love it. I just can't stop talking about it. I'm ready to jump in as soon as I finish this video to do a pre-approval. But it's very streamlined. And most of these platforms are just making it easier, right? Instead of having 4 or 5 apps to get the job done, now we can do it all in one place. And, that's what I love about it.
Awesome.
Good job, Dante, for changing the LOS system for Epic.
Woo! It took a minute.
Epic move there, buddy. Epic move there, buddy.
It took a minute, Vince. I tried to get him on the train 2 years ago, but I'm glad, better late than never.
And for the audience, we're just having a little fun there. Either way, we still get the job done, whether the technology's there or not.
True.
Yeah, either way, we were still getting it done.
Still closing the deal. But no, thanks to Marissa. She was the one that put the bug in my head. But typical guy fashion, I had to feel like it was my idea before I actually made the change. Like, hey, you know what? We probably do need a new software. And then a bunch of people like, I told you. I've been telling you that.
Get your hands on them little toys.
Get the
gadgets. Get into the 20th
I want to be on the
century.
beach one day doing a loan. Like, just living the dream life.
Pretty soon I'm going to get you on a tablet that it's linked to everybody, and we all share a tablet. And we can see what everyone's doing. It's
Well, I mean, that's the thing about technology. You have to embrace it, because even now I say to these, I mean, for an example, the client that was in here for an hour, she only has her phone. She doesn't have a laptop,
Wow.
So it's one of those things where it's like, oh, well, she needs to sign on a PC. Well, what if she doesn't have a PC? We're going to have to adapt to the new world where some people like, hey, this smartphone here does everything.
Yeah.
For me. I don't, so we're going to have to adapt to that. That's just the reality.
Because most people don't have a PC or a laptop these days. No. And I was surprised to even find that out, unless you're actively working on your laptop every day, most people don't have them. And I was just so surprised or a student or something like that. But a regular person doesn't have a PC or laptop. It is just everything on a tablet or a phone.
We'll let the boss get to the house cleaning tips. And before we do that, I realize to the audience, my technology and lighting needs to improve. We'll work on that in the next couple of weeks. Okay, everyone?
It's the little things. It's the little things.
It
Yeah.
definitely is.
Let's do the housekeeping notes. So this episode today is sponsored by Epic Mortgage. Whether you're buying, investing, or refinancing, call Epic today. That's 708-905-5300. That's 708-905-5300. Is your dreams, your goals? Let's plan together. Now, if you do need a step-by-step playbook or a book in general that can give you the blueprint on how to turn your mortgage into a wealth-building machine, please check out the Ultimate Mortgage Guide. It's available on Amazon. After this show, whether you're listening on Facebook, LinkedIn, or YouTube, I want you, if you're on YouTube, stay on there. If you're not on YouTube, go onto YouTube, check out our YouTube channel, Epic Spotlight, and we have our most recent episode is with Marissa Jackson. Marissa Jackson is a powerhouse in Chicago real estate with almost 30 years of experience as a broker, investor, mentor, and educator. She's the founder of Marissa Jackson and Company and We Wealthy University. Both focus on helping families and professionals build real estate wealth with strategy and confidence. Had a great conversation with her. And actually, Marissa has her We Wealthy Investor Retreat starting tomorrow, Thursday through Saturday, October 16th through the 18th at the Sable Hotel at Navy Pier, Chicago. You can get tickets online at wewealthyuniversity.com. You can look up the event. They do have a limited code, so make sure you look up the code. I believe the code is Chicago. If you type in Chicago, you will get a discount on those tickets. But she will have a We Wealthy University retreat tomorrow through Saturday at Navy Pier. So that would be excellent to attend. And then we do have some preferred listings. Let's start off with 13827 South Wentworth Avenue in Riverdale, Illinois. It's a 5-bed, 2.5-bath. This property has just been relisted, so it's back on the market. Contact Amico Pope 312-600-7673. And we'll have Amico on actually on Monday. So we'll have Amico and we can talk about some of the listings and what's going on in her neck of the woods. We have 412 North Ridgeland Avenue, Elmhurst, Illinois. It's a 3-bed, 1-bath. Contact Laretha Lowry, 708-670-8165. We have 16029 Circle Drive, Markham. Great opportunity for an investment property going for $109,900. It's a 3-bed, 1-bath. Contact Keith Terry, 773-655-1360. We have 2 new construction properties in Jacksonville, Florida, 12673 Simbay Court and 12707 Simbay Court. They are both 4-bed, 3-baths. Contact Charday Nix, 904-520-8041. And then we have our condos, 6945 South Dorchester Avenue, Unit 2S, Chicago. It's going for $149,000. Contact Evelyn Wood, 773-718-9742. We also have 2030 East 72nd Place, Unit 3D. It's a 2-bed, 1-bath, going for $109,000. That's another Evelyn Woods listing, 773-718-9742. And we also have 548 East 50th Street, Unit 3, Chicago, Illinois. It's a 3-bed, 2-bath condo, $269,900. Contact Jessica Roberson, 708-518-8120. All those properties are located on my website at DanteRoyster.com. So if you want to take a look at them, go to DanteRoyster.com. If you want to look at other interviews that I've done as far as the Epic Spotlight podcast, you can definitely go to DanteRoyster.com and you can see bios and pictures of all the guests that have made it onto the show. So we have some questions. Go ahead, Vince.
Before we hit the questions, I want to do 2 things, and I won't take too long. What does our number look like right now?
Right now, we have 503 people listening to us right now, so really appreciate that. Thank you so much for listening today. That's great. Yeah, so shout out to all of you taking your lunch break and getting your learn on. So appreciate that.
So I'll be real quick. Thanks to the audience for listening. When me and Dante put this together, we never thought we'd have this many viewers consistently. So we appreciate it. And also, too, it's the time of the year where loan officers may look to make a decision of changing places going into 2026. So if you may be in that category and want to have a conversation with either myself or Dante, feel free to reach out to us. And the other thing, too, realtors, if you'd like to be a guest on the show and talk about your listings and bring this show to your clients and potentially answer some finance questions without any feeling of obligation and just in an open forum, reach out to us and maybe we get you on the show in November.
Definitely appreciate that.
Perfect.
Yeah, we love to have realtors on, have that conversation. What makes them tick? How are they successful in the marketplace? How we can help. It's a community, and the community is not just Epic Mortgage. It's everyone. Our job is to help consumers buy homes, invest into their future, and we just want to do our small little part on it. And so we appreciate everyone listening today, definitely. And we're going to continue to bring different topics and different subject lines and different people on so we can get different voices and so you can get the real information. So definitely continue to like this video if you like this topic, and make sure you share it with friends and family. We're here Monday through Wednesday, 12 p.m. to 1. Let's get into some questions.
Yep.
We got Russell, Dante, Marissa, and Vincent brought real clarity to the complex debate. Appreciate that, Russell. I mean, it was a really good article. You guys both should read it when you have time.
So we have.
Yeah, true. Or you can use ChatGPT, whatever you want to do. But it is a good article. It was, it kind of gave a historic look on the battle between brokers and bankers, seeing the ups and the flow, just the ebbs and flows of just competing for people's business and what has made it change. It didn't give a decisive victory to anybody. It gave it a draw, but it was good information. Next one up. Wow, what an insightful discussion. Learned so much about brokers versus bankers. Appreciate that, Roy. Yeah, I mean, once again, I have nothing. I believe in abundance. I will always say that. I believe there's enough for everyone. So
Yes,
I'm not trying, so definitely I'm not trying to take anything from somebody else. If I can offer a better product or service than somebody, then and someone chooses me. But there are times where people choose to work with someone else, and that's okay. It's okay. There doesn't have to be hard feelings. But we do, in my personal opinion, I do offer a wide variety, and I can help so many people that sometimes it's overwhelming because, I don't always have to be the 590 person, with 3.5% down. I can also work with the 800 score with 3% down. So I do have variety in that nature. And I just want to make sure people are aware of that, because so many times, people want to put us in a box. These realtors say, oh, only this person, oh, you need to go here. And it's like, no, we can work with anyone.
Mm-hmm.
All right, next one up. Mako, so interesting. Do you think tech will fully level the playing field soon?
I'm gonna hit that up first. There's a lot of changes going on in the industry behind the scenes. There's real estate firms buying mortgage servicing companies. The technology is going to make it very hard for the broker world to stay competitive against the big box places in time as technology evolves. So again, as a consumer, it's just going to turn into being your position as to how you want to educate yourself. There will never be an equilibrium because we can't afford that technology from a dollar expense from a platform in order to stay competitive when this truly goes to technology first.
I'll say I'll put it in a different. I understand what you're saying. I say this: we're kind of like Transformers and GoBots. All right, so I'm dating myself, of course, but we're plugging in as a mortgage broker. We're plugging into the lender, and so as long as end lenders have a wholesale channel, we will have access to what they have. So as long as they're continuing wanting to evolve, then we will be just as strong and competitive. So when we have relationships with the likes of like Rocket Mortgage, who's number one in the country, or top 5 or whatever you want to say, when we have relationships with them and we can plug in with them, if they're going to open up the door to us, we can stay competitive. But to that point, what you say, like if we have a company, I don't want to give out a name, that is comfortable and complacent with where they are, and they're not willing to embrace the technology, if they're still going to go around and say, exactly, if they're still going to say, hey, Marissa, we got a lot of white label flyers that you can fill out, and that's the only course of sales and marketing they're going to provide you,
yeah, that's not going to work.
Right?
it's not going to work.
That's not going to work, right? I mean, exactly, right? I mean, let's be honest. The email drip campaigns don't work anymore today. It's this that works, right? Talking to everybody and putting it out, right? Like that's what it is.
Putting a face out there, yeah.
Exactly. And you're 100% right. The wholesale market will never go away. And obviously that wasn't what I was trying to get at. My concern is that because technology is going to come it's going to evolve to the point where we're not going to be able to get to the consumer first. And that's what I'm concerned about.
Yeah. What I like about, well, go ahead, Marissa. I got an idea, but go ahead.
I mean, I can see that happening, Vince. Yeah. The consumer is definitely gonna hit a bot before it get to me, right? And so, I mean, that's when we have to position ourselves and put systems in place and move with time with technology. I know Dante talked about me the other day. I'm over here building a workflow. I'm over here building a robot, just to answer mortgage questions for my clients. I'm moving with time. I'm moving with them. It's plenty of places you could build your own robot. I'm over here customizing chat GPTs just to have, just to answer those type of questions. So I feel like if we're in a space where we can move with them, we will be in a great position.
Yeah, I got one more thing to add to that. Regardless of how much technology has changed, the one thing that hasn't changed is the cell phone. It's in the telephone, right?
Yeah.
It's in our pocket or whatever. It used to be on the wall and it used to have a cord, right? And it didn't have voicemail. But the end of the day is you just got to stay in front of your customer. You got to make those calls, right? If you're a loan officer, realtor from a business standpoint, you got to be known, right? It's not just a text message and an email. It's a phone call twice a year. Whether that's on a birthday or an anniversary date, it's 2 calls a year.
Yeah.
I had a conversation. And it all starts with the conversation, right? That's the key of anything else I say from there. But I had a conversation yesterday with an accountant in Texas, and he's a real estate investor. And I was talking to him, and we were talking about AI, and we got into technology because that's always like the big elephant in the room and stuff like that. And at the end of the day, he was not arrogant, but he was confident that he's a strategist. There's a need for what he does. He has a certain type of clientele that comes to him that has questions, and he does the Q&A, he answers them, and he's the wealth of knowledge. He is always going to be the lighthouse, right? You have to go to the light, and so, that is where the market is moving. I mean, obviously, more money, more technology, more speed. But if they're not answering your questions, if you don't feel, and he even said it was funny because the appointment was set up from my assistant. My assistant set up the appointment, and he said, and I was like, a lot of people would tell me that I shouldn't have an assistant, right? I should have just Angel AI and duplicate myself, and then just have my robot self call people and schedule. And he's like, no, I'm glad you didn't, because I probably would have hung up if it was a robotic person. Since it was a real person and I could tell she was off script, I was okay with it because it was a human connection. I was like, oh man, that's what's up.
Yeah, and that's true. Some people just value that human connection versus, AI. And because AI is getting so big and in a short period of time, I think people are not trusting it, and it's just what it is. And I understand, because it's just moving so quickly. It's like, how do we know this is built correctly? How do we know it's going to give us the right output? So totally agree. That human touch, that human experience is still wanted. And I think will always be wanted.
Yeah, I love our new LOS platform, and I feel like that made us, back in the game to be competitive. The fact that I can put the information in, I can do products and pricing all
right
at
there.
one time, right there. Already know what lender I'm going to be going with. I'm ready to go. It definitely makes me faster and more efficient. So I'm looking forward to that. All right, next question. Great chemistry between the guests made the topic easy to digest. Hey, that rhymed.
That was good, even though me and Vince didn't do our homework, but we're glad we vibing.
I'm glad we were on the same page there, Marissa.
that's 2 out of 3. That's a majority right there. Don't read.
There you
Typical.
go. Like I said, we got you there, Mr. Stats.
That's funny. I'm Dixon writes, I'm curious, who do y'all think adapts faster, brokers or bankers? Who
Definitely
adapts faster?
brokers.
Brokers, yeah.
Yeah, I'd say the
Definitely.
same thing. The banks have too much legacy systems. It takes them a very long time to be able to do
Yeah.
something like that.
They're still old school.
Yeah, you know, it's funny when you think about adapting. Obviously, the mortgage brokers, and you can say simply by non-QM.
Mhm.
Non-QM has been a product line that's been really has been there probably for the last 10 years. It's really been pushed heavily over the last 4 years. And now on the tail end, you're starting to see the bigger box places saying, oh, we offer non-QM. It's like, bro, we've
Where
been
you
having
been at? Right.
Yes.
It's also though the search for business too, right? As rates move higher, there's a product range for new products because there's better return on the actual capital being given out.
Correct.
Yeah.
All right, next one up here. Jack, excellent episode. Collaboration really does sound like the ultimate win. Always. Teamwork makes the dream work, right?
Collaboration over competition.
There you guys go, rhyming. And I think Jack's asked questions before.
Yes, he has.
I don't do too well on remembering all the questions there because I don't see all the names all the time. Plus, I'm here twice a week, maybe once. So, but
you were 3 times this week, buddy.
I know it was a struggle. Trust me.
Man, you did it. You did it this week. Appreciate you.
So we're gonna give you a pass for not doing your homework this week.
Yeah, you were 3 for 3. Loving the live chat vibes today. Appreciate that. Olivia, appreciate that. Thank you. We're trying to do our thing today. Yeah, bullseye. Got it.
It's the way I like to do the show. No outline, no nothing. Just let it rip.
Are banks losing their edge because of slow adaptability?
The only thing I say to that is everybody wants speed, right? And that comes into the play. Banks don't move as fast in one sense. There's nothing wrong with the banking platform. I know people from local banks that have products that we will never be able to touch.
Sure.
And it's great for the community in that sense. Some banks give back to the community, which is something also that's helpful. But in terms of adapting, the technology will never be there as fast as it can be in the broker world. I won't just say never. But for us, it's simple. We plug and play into an organization that's already mastered their technology. And the other thing to that is there's just too many levels of management in the banking system.
Agreed.
Man, you hit it. And that's the thing. That's the only, with banks, the profits shrinking under more technology and compliance overhead. And so when you have compliance overhead and technology and you're having to put the money into it, you're starting to see, the profit line shrink. And that's what you see: consolidations, sales of companies, mergers, because there's just not a lot of profit. When you're independent, there's still overhead. Obviously, from an Epic Mortgage standpoint, there's still overhead, but independent mortgage brokers can just move quicker, and they don't have all necessarily the compliance. We have to take care of our renewals and our headaches in that, our CE that we just talked about earlier, but it's not nearly compared to the levels that they have to be, because they're the ones spending the money on the AI and the new, different softwares and stuff like that. And so, profitability is going to be a situation that's always going to slow down banks from just making knee-jerk moves, I would say. Joe, which model gives clients more flexibility during tough markets?
Brokers, of course, right?
Yeah.
We just talked about the range of products we have and how they're limited. So, of course, during a tough market, I'm going to go with a broker. What options you have for me? And, we have more than one option. If A doesn't work, let's try B. If B doesn't work, let's try C. And just go down the line until we get it to work, right? Pretty much. So definitely brokers in a tough market. That's who you want to seek out there.
Want to add one thing to that. And not picking on a bank in particular, but Wells Fargo pulled out of the mortgage industry a couple of years back.
Yeah.
And then they turned around and now they're trying to get back into it, but they're doing it from a call center, right? So at the end of the day, right, you're calling middle America. You're not having a face-to-face conversation, yet you can get to the broker at a faster pace and have that conversation. So just kind of think of that. There will always be big boxes coming in and out of the industry, especially in tough markets.
Well, big box is visible, right? If I'm driving on 294, if I'm driving on they're the ones spending big money, big bucks on banners and stuff like that. They're on the radio ads.
Capital. Yeah,
correct. But just imagine, right? The visibility of the Wells Fargo branch sitting in the corner of 83 and St. Charles Road doesn't allow you to walk in the door and fill out a loan application, right? That's how you go online and call the call center, right?
Correct.
So in that end, like they're leaving the marketplace.
Correct. Yeah, it's obviously brokers is the answer to this question, but it is one of those things. I mean, the banks are always going to be there because they have infinite amount of money.
Sure.
Yeah, they have the visibility. Yeah, they're 100%. Out there. Yeah.
And so we spend a lot of our time and effort and money in time, energy and money is really what we have, and we're spending that as far as just getting the word out, getting the buzz out, getting the the information out. That's why we're doing these things. But this is not free. This is a situation that we have to pay for, but we're willing to pay for it to get the knowledge out there, and hopefully it can reciprocate a deal or service that we can provide for a client out there that's listening to us. So I mean, it's one of those things that the reality is we don't need to necessarily feed a family of 20 or 50, per se, but
we still need to eat.
Yeah, we still need to eat. So it's just one of those situations.
Dante's got to feed the 2 kids at the Bears game on Sunday.
That is correct. That is correct.
We're not going to go down that path. If it was a Green Bay, I'll probably be okay with it.
Marissa, go do your homework.
Yeah, you went down that path, then she's a Green Bay Packer fan.
Yeah, she belongs in the penalty box on that one, man.
Don't do me like that,
man. Crazy. A venture show. Can hybrid models be the future of lending? That's a good question.
Fast answer, yes.
Yeah. It is funny to me, to be honest. A venture show. Thanks for asking the question. It is interesting for me on that is that some of these hybrids, they are hybrids just to kind of say, oh, we have these options, but they don't really want to broker out that deal. That's not really why they're in business. I'm talking about the mortgage banker. The banker wants to do the portfolio. He wants, I mean, that's how he's compensated the most. He'll offer a couple things over here, but he doesn't really want you to, from a loan officer perspective, he doesn't really want you dilly-dallying and brokering out deals. Because if you're going to broker out all these deals, you might as well just be a broker.
Correct. Right. I mean, obviously, the banks have always had pushback of being able to do that. Like, hey, you got to keep it in-house. But they realize, like, hey, there's a portion of business channel that we're missing because we're not doing that.
Correct.
But that's because they don't want it on their lines.
Correct. But, so, I mean, out there for consumers, there's banks, big box banks like we've talked about, Wells, Bank of America, BMO, Chase of the world. Then you have mortgage bankers, that do have this capability of kind of banking out certain deals and then, with their own portfolio products, and then they kind of broker out certain things that they are willing to do. And then you have just pure brokers that just, say, hey, we're going to plug and play with this variety of products to service you, whether it's if you're rate sensitive and we got to hit a certain rate, or if it's a scenario where your alternative income programs, and that's really where we've shown an ability and flexibility to work with self-employed business owners. That alternative income programs is pivotal in our business and how we really differentiate ourselves. But yeah, it is a thing that, I mean, I sat on some of those correspondent calls, where they say, hey, Dante, we want you to go correspondent. And it's like, all I'm hearing is that, you really want me to bank in these deals to make more money, from a profit perspective, but, you don't really want me to, broker out these deals.
Yeah.
Yeah.
So it's interesting. Let's see. What's the biggest advantage brokers have over big banks today? Thanks, Speed. Banter.
Yeah. Efficiency, speed,
and choice.
Yeah. Options.
Yeah. We want to create options for you. And a great show. Everyone's bringing their A game. Appreciate that, Paula. Paula's always a good listener, so appreciate you listening today. We try. And, we'll have, appreciate that. And look, I mean, almost to the dot, we did
I was just going to say that, man. Perfect ending question. Perfect ending comment right there at the hour marker. Couldn't have been planned any better. I didn't know if you were going to feed into that one or if you were going to drop the ball like Green Bay did against Dallas.
Oh, my God. Okay, Vince. You know what? We're not going to take it down this path.
No, I appreciate it. I appreciate Marissa joining us. I appreciate Vince for being here, being a trooper this week. It was a great week. I kind of wanted to do a quick reflection if we could. I mean, obviously we had on Monday was a great topic. It was so great. I forgot. But, yesterday we had Dennis Greco. He was really good, just bringing insight from a contractor perspective. Who was on Monday, Vince?
The financial guy.
Yes, Randall Avery. So Randall Avery was, man, the time is just flown.
Oh.
But Randall Avery was on, had a great debate. Appreciate that. He said he's going to come back again in about 2 weeks. We're going to debate something else. So that was really fun. So I had a great week this week of talking to people. Appreciate it, Marissa, again. Mortgage brokers versus bankers is always a hot topic. The consumer, they just want to get it done. We're the necessary evil. But, I think there's just a better choice to at least get an option or a quote or something where you can see, hey, what can we do versus what someone else can do if you're not already working with us already. So appreciate everyone listening in. We'll be back on Monday.
Sorry,
anything
guys.
else?
My apologies. I left my window open. I didn't realize the dogs were barking like that. You guys can hear it.
Is it still raining outside or what is it doing?
I don't know. The blinds are closed, but the window's open.
Well, one thing, the government shutdown is slowing down some of the usual economic reports, but we're still getting fresh data on home prices. And honestly, the numbers still look solid. So
yeah, it's surprising that everything held this year the way it did, right? And
yes.
My prediction that the shutdown would be over in the next 10 days is off. We're in this for the long run. So I'll pull a mulligan on that one because I was off.
I think it's gonna. I honestly think it's gonna last a little bit because there's really no. It's who's gonna dodge first, who's going to bend first, and both sides are really putting their heels in.
Yeah.
I listened this morning, and when you look at it too, Trump's the type. His cabinet, and everyone in their views is. We're just going to move forward. We don't care. We're just going to do what we need to do and what we want to do, and where it goes, right? Because at the end of the day, if we go ahead and say we're negotiating, then it's always be a negotiation. Regardless of what side of the fence you're on here, it shouldn't be used as a tactic to try and negotiate. It should be what it is, and we use everything else to plan at times, but don't do that.
Yeah.
The thing right now that really why it hasn't made a huge stink. It hasn't impacted people just yet. I think we're going to get the first lines of people really feeling it. Maybe in the housing sector when you're self-employed and you can't verify your tax returns, or maybe the delay in 4506T that's going to be coming up with IRS stuff. But you just hit us right now in a spot, just a soft area that there's really no major effects. So no one's really even feeling it yet. And once they feel it and we can make some ruckus, then they'll finally let's get to the table and let's balance our budget.
Yeah. One last thing, and then I'll stop and let you close out. The 10-year is getting close to 4%. We need that 10-year to be under 4%. We're going to get another rate cut at the end of October. Just keep that in mind. We're getting there.
Marissa, contact information.
You can reach me on Facebook, TikTok, and Instagram, Marissa Hazel or Mortgage by Marissa, by phone 773-290-9929, and email is mhazelwood@epic.mortgage.
Awesome sauce.
Or you can catch Marissa outside of Lambeau Field holding up a sign. We help Green Bay Packer fans.
Have you ever been to Green Bay?
No, I mean, it's always one of those bucket list items.
Yeah, it's a bucket list item for me too.
She never even been to Green Bay. She can't be a fan. She's never even been there.
I am a fan.
She just likes the colors. You just like green.
No, it's not the colors either. It's childhood stuff. But we'll talk about that on another show.
Got it. Well, for everyone,
good.
make sure,
Marissa, you have
make
a
sure
great afternoon. Dante, man,
you have a great
appreciate
afternoon.
everything.
Make sure you check out the Epic Spotlight podcast once you're done here, and we'll have a new episode tomorrow, and then we'll have our monologue on Friday. Check out the monologue on Friday. Put some time and effort into that one and see what you think. All right, everybody, have a great rest of the week, and we'll see you on
Bye.
Monday.
See ya.
Have a good one.